This is special coverage on Zacks.com. Retail's dim holiday season. Well, there seems to be little reason for retailers to get excited this holiday shopping season. Our senior retail analyst Rob Plaza says that with the holidays right around the corner, this may be one of the worst holiday shopping seasons in recent memory. Certainly my recent memory, because I'm not that old. I don't know about you. Rob, welcome to our humble abode here. You've never been here before, but we appreciate you taking some time to stop in and chat about retail with us.
Thanks for having me.
On the day that we record this, which is the 14th of November, falling for the fourth straight month, U.S. retail sales reported a record plunge of 2.8% in the month of October. And so I guess that kind of underscores the way you feel about this holiday shopping season. Really, the takeaway on the bottom line is it might as well be a write-off, huh?
Write-off is it's a bit extreme of a term because there are still people shopping. It's just they're not willing to pay as much for items as they were before.
Okay.
They don't have as much money to spend. I mean, unemployment's rising. Credit markets have gotten a little tighter, well, a lot tighter. So it's much harder to go out and spend on those credit cards.
Right.
And then consumer confidence. When you see neighbors foreclosing on their homes, the value of your 401k declining at a rapid pace in October, you just don't have the same kind of enthusiasm to go out and shop as you did, say, last year or the year before.
But there are going to be pockets of activity.
There have been, yeah. I don't want to say strength, but there have been areas that are less worse than others. If we look at the discounters, Walmart for one, but even their report was tempered. The guidance going forward was lower than expected.
Right.
A few specialty retailers still have shown some strength, but for the most part, you could throw a dart at a board of retail stocks, and you just stay away from any of those that you hit.
All right. One thing that does concern you, though, as a retail analyst is, for lack of a better term, the changing consumer spending attitude. Mm-hmm. A lot of consumers are going to have to become more frugal in how they spend. Foregone conclusion, they've already begun doing that as we speak. But the question that you raise, and I find very interesting, is what happens when things turn around and they no longer have to be as frugal, but they still have that different attitude about spending. Is that going to change? And since you raised the question, I presume you have an answer.
Well, I wish I had the answer, but I think to find out where we're headed, let's look back at what's happened over the last few years. 0% financing, no interest, no money, no payments for 12 months on a big screen TV. Mm-hmm. So what that did is that brought forward a lot of sales that otherwise wouldn't have happened. So you could argue that over the last 5 years, since we've been in the extremely low interest rate environment, that retail sales were higher than they should have been in normal times. So what we've seen credit markets do right now is they've started to pull back that credit. You have less access to the credit, so you're being forced, or I should say the average consumer is being forced to cut back on their spending.
Right.
So what do they do with their money? They're taking it, paying down the debt they do have, buying necessities, buying things they want, eliminating purchases altogether that they don't need. I mean, do you really need to have that 60-inch TV because you have a 42-inch TV that's working just fine?
Sure.
So those types of purchases aren't going to be made. So looking ahead, what's going to happen in a year down the road or 2 years down the road when you no longer you haven't kept up with the Joneses, your next door neighbor who's buying all these new items because your next door neighbor lost his job or lost his house? What kind of attitude are you going to have towards spending at that point? Do you need to have those things? Are you going to just say, you know what, maybe going to the Goodwill store or going shopping only at discounters is the way to go? A more frugal society is what we're looking at.
Do you think that's on the minds of retailers even now?
I don't think it's on the front burner. At least the conference calls that I've listened in on, the attitude is, okay, this is a down cycle. There are all these macro headwinds that are causing consumers to cut back. But once we get near the end of the cycle, conditions are going to go back to where they were before.
So they haven't even begun to think about down the road when things turn around.
No,
they're just too busy trying to get through what's going on now.
Yeah, they're performing triage, cutting expenses, cutting headcount, reducing inventories, reducing the number of new store openings. just trying to save money where they can.
Yeah. What about the categories of retailers that are on the endangered list as far as closing here shortly after the first of the year? What categories do you think are the most vulnerable? I had read apparel is one, furniture is another.
It's really going to be on a company-specific basis, because I can't say that all home furnishing stores are going to go out of business, because there will be survivors left even in this type of environment. There's just going to have to be fewer stores around to sell the merchandise. But I definitely would stay away from any retailers that are sitting on a mountain of debt, or they need to access the credit markets in order to keep buying their inventories. Those types of stores are going to disappear.
And Black Friday this year, the day after Thanksgiving, which normally marks the beginning of the holiday rush as far as shopping is concerned, is not going to be a rush? You think it's going to be more of a crawl?
No, I think because the sales are so significant and so substantial for that first hour, retailers would give away merchandise just to have the press come in and say, look, things aren't that bad. Come on out and shop. We're going to have the Christmas. So, I mean, Black Friday is going to be here, and I think you're going to see Black Friday extend in terms of the number of discounts, the level of discounts. I mean, we're going to, it's going to be common to see 60%, 70%. 80% sales.
You told me Black Friday is going to extend into the first quarter of the new year?
Yeah. Every day might be Black Friday from now on.
Well, the point you make is well taken. Not all retailers are going to get walloped by investor fears. As a matter of fact, there's a couple of people who you cover, a couple of companies that you cover. GameStop, for one, expected to do pretty well this holiday season, with video game sales expected to be strong both this year and into the new year.
Yeah, video game sales are still strong, and even with GameStop, their estimates haven't been coming down. I've even increased them over from the end of my second quarter report. So I mean, their business is solid, but the stock has just been hammered along with everything else. It has a higher multiple than several other retailers whose businesses are struggling. But the video game, it's not a short-term fad. It's going to be a long-term trend. It's just another form of entertainment, similar to the movies.
So when will it be time for investors to start considering retail stocks again? Because we always hear that once the news is on the street, once we know things have gotten better, it's too late. It's already old news. But unfortunately, is that what we're going to have to wait for here before investors sit back and say, yeah, okay, I'll take a shot on some of these retail stocks?
No, in fact, we've seen several fits and starts over the last year with retailers, and up until October, up through September, retail stocks as a whole were outperforming the market and were even up on the year. And that was due in large part to some giant moves where the group would move 30% in a month. And over the summer, when we saw oil prices peak, there was a massive asset allocation shift that went out of commodity stocks and loaded up on consumer discretionary. So with retailers, it's so hard to pinpoint when things are going to get better, because there's institutional money that moves into the space so early because the stocks are beaten down and so cheap. And once they do start to run, like you said, by the time the numbers show that conditions have improved, the stocks have already made their 40-50% runs off the bottom.
What about gasoline prices? Real quick, the retailers that offer gasoline to their customers, that had been a growing trend for a while. Maybe they were taking in some extra money there because the price of gas at the pump was high. Now that price of gas has come down. So is that just adding to their problems, or is that still bringing their customer into them?
Surprisingly, the lower gas prices have juiced some of the results at the discounters, especially. BJ's Wholesale had a really good number just from lower gas prices. And strangely enough, they benefit on the way up as well, because they have, if you're a member of the club and you buy gas, you get a 5 to 6 cent per gallon discount. Mm-hmm. So it's just something that helped bring traffic in.
And will continue to?
Yes, it will. And as far as retail spending goes, the lower gas prices is a marginal positive, but when you're spending $40 a week less, or maybe $100 a week, or $100 a month less on your gas, mm-hmm. that really pales into comparison of losing $50,000 in equity in your house, or watching your 401k go down by half.
All right, point well taken. Rob Plaza, Senior Retail Analyst at Zacks Investment Research, and for us here on Zacks.com with Rob. And the Holiday Retail Outlook. I'm Terry Ruffalo.